everyone. Welcome to the latest episode of the ManageEngine Insights podcast. Today, we are going to be talking about the rise of fintech, unraveling the revolution transforming the financial landscape. The fintech sector is one of the most dynamic and rapidly changing industries across the world. Many recent studies have revealed that the global fintech industry has been largely resilient despite the impact of COVID-19. During a time when many industries were struggling to stay afloat, the fintech market instead witnessed massive growth during the last 1.5 years. The industry has helped expand access to financial services across the world, particularly in emerging markets. Fintech innovations have been crucial in reducing the cost of providing financial services, making it possible to reach more people and eliminating the need for in-person interactions, which was essential for keeping up economic activity during the pandemic. However, it is also important to keep in mind that all technological advancements come with their own set of challenges. So to help us understand this phenomenal growth of the fintech industry, what it means for the financial world, and the challenges it brings along with it, we have with us Manan Leo Q, an entrepreneur, a fintech and regtech mentor, a multi-industry CISO, a risk security and resilience executive and practitioner. Manan has 19 years of experience both on the consumer side and the consulting side, developing, managing, and delivering large-scale multi-country cross-regulatory risk, security, and resilience practices, programs, and teams across APAC, Middle East, Europe, and North America. Manan is also a thought leader and internationally recognized speaker. Hi, Manan. Thank you so much for joining us today.
Hi there, Priyanka. Thank you for having me. It's a pleasure to be here. Looking forward to the conversation.
Thank you so much, Manan. So we'll get started right away. We'll start with understanding this growth of the fintech market that we have seen lately. So the first question I have for you today is, what are the factors, in your opinion, which have contributed to the rapid growth of the fintech market in the last few years?
Well, thank you. Thank you for that question. That's an awesome question. I think our practitioners in this space follow this subject really closely. I think before the pandemic hit, we were already seeing a very rapid growth, not only in Southeast Asia, but APAC and globally, in terms of the digitization of processes across organizations and across all segments, whether you're in the oil segment, whether you're in the financial industry, regardless of which industry you're in, automation was accelerating in its pace. And that is something which was contributing already in certain economies to the uptick and upuse of automated payment technologies, digital payment technologies across the board. China is one example where they started the adoption of digital payments long before they were fashionable across the world. So I think it was the digitization of the economy in general, the penetration of the internet, the democratization of technology, which was already happening, well underway since the 1990s. That's number one. Number two was, whenever there's a new technology which takes hold or is brought into the market, the fundamental barrier in mass adoption is always going to be user trust in that particular technology. And user trust in digital payments in the financial space in the past couple of years has overcome that trust hurdle. And so we were seeing adoption, especially in the largest market in the world, in China, and of course in Southeast Asia, in APAC, especially in the US, which is was still a bit sluggish, but now that has taken off as well. So I think the second factor which saw the mass adoption of financial fintech innovations and platforms was the user trust in the fidelity of these particular platforms, of certain particular platforms, and the services which they offer. I think these, and number three, of course, was in some cases the penetration of these services, of these four-letter startups and unicorns, which we have seen across the globe. This new startup culture and the penetration of that saw the fintech innovations and technologies to further accelerate in terms of adoption by the masses. So I think these three factors in the past decade or so have accelerated the change and the transformation in the fintech space. I think number one, the technological penetration, the automation. Number two, the user overcoming the trust hurdle, and number three, the emergence of unicorns like Uber, like Grab, all Deliveroo, etc. All of these major names. I think these three are the major components. Factors. Last one is, of course, the pandemic. The pandemic and any such mass event always accelerates digitization, and especially in the fintech space. So, but that is a happenstance. The first three are the fundamental ones. The fourth one is just kerosene on the fire, basically.
Right. Thank you so much, Manan. I think those are all four really good points, but I believe the second point that you mentioned was very interesting about user trust, because despite all the technological advancements that we see, user trust is something which is very integral, without which I think none of this would have worked out. That was a very interesting point. Yes.
No, absolutely. I mean, I myself, in the early days, when fintech innovations were coming into the market, money is something which is very tangible, and that is something which users are very reluctant. So spending habits in different geographies is really different. I mean, spending habits here in Asia, in India and Southeast Asia are quite different than they are in ANZ and European and first world countries. But even in first world countries, there is a barrier which has to be overcome. And so now we're at an inflection point where that barrier has been overcome for the reason which I mentioned. I think that is, like you rightly said, that is fundamental. That is one of the fundamental transformative blocks. Absolutely.
Right. So thank you for that insightful answer. I think we'll move on to the next question, which is, according to you, what are the top three benefits that this fintech innovation has brought to the table?
No, absolutely. I'm a very passionate advocate of everything to do with technology and automation, and especially in the fintech space. Look, money is a fundamental component of our society, and everything to do with finance is a fundamental component of how human beings, businesses, communities, companies, individuals interact and exchange and generate value in a capitalistic market. And so innovations in the space are always going to have a very large impact on society in general, on our way of life. That's number one. Number two, I think, and it's of course, in the fintech space, the innovation and the platforms which have been brought on the market have large, impactful trajectories which we could traverse. That would be a very long conversation. I think in a succinct way, I think there are a couple of major benefits which fintech innovations and platforms have brought. Number one, they have democratized technology across the board. So before the age of fintech, technology was a differentiator between the haves and the have-nots. And technology was not that permeated across societies. Maybe in the first world, but even there in the US, the UK, European Union, ANZ, and Japan, there were stratas of society which were technologically savvy, and they usually happen to have more resources at their disposal. That was the differentiation between the stratas before the advent of fintech innovations. What fintech has done, it has democratized technology and the use of technology. And what does that mean? That means that that's the first benefit. The second benefit is because of this democratization, every person and their uncle is able to transact and build new innovations, new platforms, new kind of businesses, which were not previously possible in the old pre-fintech days. Because of the fidelity of the transactions and the innovations which fintech companies have brought to the market, a new kind of entrepreneurs are being born who are building new kinds of businesses. That's number two. Number three, because of the cross-national nature of these platforms, fintech technologies bring the world together. And that means that anybody sitting anywhere, or I mean, what I'm trying to say is people can build large multi-country platforms, which can have a much more larger reach than those platforms and technologies in the financial space pre-fintech. And so I think these three have been, in my view and in my experience and in my interaction with the people I work with and the companies and the CEOs which I work with, those three are the ones which have had the most impact on customers, on businesses, on governments, and on society in general.
Right. Yeah, I think that's very interesting because, given the fact that, the kind of global economy that every country is striving towards, these innovation comes at a very, very opportune time, I must say.
Yeah.
Because the third point that you said, how you can build multinational cross-border platforms, that is crucial for, building a global economy of sorts.
No, absolutely. I mean, we have seen unicorns in India and Southeast Asia, in Japan and ANZ in Korea, and that is all because of the fundamental building block, which is the advent of the fintech platforms, which allow these unicorns and these new breed of entrepreneurs to build those cross-country businesses. So yeah, I mean, that has been, in my opinion, a transformational change and benefit to all of us.
Definitely. So now that we've taken a look at the biggest benefits that fintech has brought to the table, I think the next question that I have for you is what are some of the biggest challenges that have come with the growth of this industry, and how can these challenges be addressed?
Oh, that's a great question, Priyanka. So before I answer that question, usually the financial space, owing to the nature of the segment, which is money or financial services, this area is heavily regulated, number one. Number two, entities in the financial space are always, because of their regulatory umbrella on top of them, they're always very quick to adopt new technologies that enable transparency, accountability, and most importantly, efficiency. Because that is in their interest to do so, both from a profit perspective and both from a regulatory compliance perspective. Now, with the advent of fintech and the advent of DeFi, decentralized finance, and the other offshoots which this enables, like blockchain, etc., what has happened is, number one, the global financial order has been taken by surprise by the ready acceptance of the masses and the use, especially of the millennial generation, who are much more trusting because they've grown up with technology, they've grown up with phones, iPhones, etc. Their barrier to adoption was much smaller than maybe my generation. It was a bit larger. So that mass adoption, especially by the younger folks, future customers of these large financial behemoths, has taken governments by surprise. And what do I mean by that? I mean, they do not governments across the board are still struggling with defining regulatory frameworks that regulate the fintech space, because this is such a new space, a volatile space. And so I think that is one of the fundamental challenges which fintech companies face. And I'll just give you an example, and I'm sure your audience, this will be fresh in their memory. China used to be the champ. China was the first leading global economy to their digital currency, financial fintech solutions, innovations were adopted on a mass scale, whether you're in a taxi cab, whether you're in a plane, whether you're buying something from a hawker center, everything they were the first to digitize that and to use fintech innovations. Now, because governments are still catching up, the Chinese political model now has put the hammer down on DeFi and fintech innovations. So that obviously is going to have a seismic effect on how fintech technologies and especially DeFi technologies are accepted across the board. What I'm trying to say is there is still, the governments are still struggling to define a regulatory framework which governs fintech and its derivative products, platforms, and services. And I think that is going to be the case for some time. I mean, there are some countries in Latin America which are adopting DeFi products as their national currency, but those are few and far between. Advanced economies in the US, UK, Europe, ANZ, Southeast Asia, and Singapore is becoming a hub for DeFi. We'll see what happens in the future. I mean, the government here in Singapore is usually always very proactive. But that is just one country among a sea of countries where the regulation is still not solid. And last thing, because of this developing nature of regulatory compliance for this particular sector, the customer protections which would exist otherwise in a legacy financial segment do not yet fully exist in the fintech sector yet. So I think that umbrella of governance and protection for the customers and for the entrepreneurs is something which is still lacking because of this governmental, this infancy of governmental thought on regulating the fintech space.
Right. I think that's very interesting. I mean, it's going to be interesting to see how the market develops once governments across the world come up with their own regulations. You know, it has been developing to this degree. So for so many years, as you say, in a vacuum of sorts, from a regulatory perspective. But you know, when they do, I think it's going to be interesting to see the effect it has on the sector.
Yeah, no, absolutely. And what I fear, well, I shouldn't highlight the negative, but this is something which I think your audience will definitely be served good by. I think there is going to be I mean, fintech is the future, in whichever form that future arrives. I think this particular question you asked, and I thank you again for asking this, is very poignant because in the end, customer protection and protection of the investment of investors is brought upon by a strong regulatory regime. And we're going to see pockets of that in some countries, and in some countries not that much. So I think there's going to be a fragmentation, but I think the future is still bright. But yeah, these dangers are still there.
Of course. So now that we have kind of understood the challenges from a governance and regulatory perspective, the next question I have for you is, what are some of the security risks that have, you know, come along with this massive growth in the fintech industry?
Well, that's a great question, Priyanka. Again, security risks are a subset of the overall financial risks associated with products and innovations in the fintech space. I mean, all digital products have security component, security is a factor which organizations, users, and governments have to consider in all aspects of technology, more so in the fintech space, because there is a different level of security is required to ensure transactional fidelity between business to business and business to consumers, whether it's your encryption, whether it's your data protection, whether it's ensuring the fidelity of your transactions. There are a myriad of technological challenges which are posed because of the transactional nature of which these fintech platforms, technologies, innovations provide. So I think and there are so many which I could name, and I've named a few, but I think the fundamental there are a couple of fundamental security risks, but the one or two which stand out to me the most, one are from a governance perspective, because governments are still coalescing their thoughts on how to put together regulatory frameworks to govern the fintech space. There is no standard for a security standard which can standardize the security footprint of innovations in this space. Now, security experts can port over methods and standards and baselines which they use in the financial space. Because in the traditional legacy bricks and mortar financial space, there are security standards, security baselines, and certain benchmarks which technology security or data security or people security has to be at. Those could be and are being applied to innovations and platforms and products and services in the fintech space. But obviously, they are not a perfect fit because these are two different beasts. One is a legacy Goliath. The other is a modern day coyote. So the regulatory oversight is not a fit, and thus the security baseline and security requirements are not going to be a match. They do provide some protection, whether it's related to customer data, whether it's related to the security of the infrastructure, whether it's related to the fidelity of the transactions, which is the fundamental security risk, especially in this space. What that means is when a transaction happens, when somebody sends a transaction over using a fintech platform or a product, the fidelity of that transaction, making sure that it reaches the intended recipient and there is no corruption in between, and that this is something which cannot be the authenticity of which cannot be denied. Those are fundamental tenets of transactional security, especially in the financial space, and those are being applied. But I think once governments define and coalesce around and your audience must be thinking he keeps on harping about this point because this is the fundamental point about regulatory oversight. Once that is done, I think the security components, the security frameworks can be can be applied in a much more effective way. But I think those three components which I mentioned, those are still the three highest category of risks in terms of security, which are posed to components, services, and products and innovations in the fintech space.
So, given these three components that we just discussed, what, according to you, are the best ways to combat these risks, given the current situation?
That's a great question. I mean, look, pandemics come hopefully once a century, knock on wood. But see, whether we are in COVID or not, digitization was already happening, and it was going to happen, albeit at a slower pace, regardless of this pandemic. What this pandemic has done, this pandemic has accelerated the uptick of technology. We are seeing, especially in the fintech space. I mean, I shouldn't be saying this, but every crisis provides an opportunity. There's a silver lining to every crisis, and the silver lining to this particular crisis is that the mass adoption of technology, the mass democratization of technology. But I think in terms of the best way to combat these risks, these security risks, is, and of course, unless governments come up with a much more bespoke governance regulatory framework, organizations could and are borrowing frameworks from the traditional financial space, which means that have a overarching risk policy in place, which is able to enterprise risk framework, enterprise risk policy, which is able to articulate and manage risks, whether they are security risks, technology risks, availability risks, financial risks, non-financial risks, across the organization, number one. Number two, in terms of specifically about your question about security, have that enterprise risk framework in place, and then of course have a well-developed, well-thought-out granular security policy in place, and that means having an ISMS, having a GRC, having a forensics, having incident management, business continuity, disaster recovery, technology recovery, crisis management, all of the SOC, SIAM, offensive capability, defensive capability. These 7 or 8 pillars of fundamental pillars of cybersecurity need to be part of the security policy which organizations make under a wider risk umbrella. I think that is what I have deployed in my work with my clients across Asia Pacific. I work both with startups in the fintech space and large behemoths in the financial space, and this is what is keeping them safe for now and in the future as well.
That's great. It's good to know that the basic tenets of cybersecurity are good enough for a foundation, for a good solid
Yeah,
foundation for the fintech risks that we just discussed.
yeah,
So, because we've been discussing the lack of governance or regulatory framework for fintech specifically,
yeah,
the next question that I have for you is, I know there is no specific regulatory framework when it comes to fintech, but the
yeah,
financial industry in general is very heavily regulated by innumerable laws,
yeah,
regulations,
yeah.
policies, and all. So what are some of the best practices to adopt in order to integrate these technological advancements into this heavily regulated industry?
Sure. Look, so I'll give an example of Singapore. So Singapore, the Monetary Authority of Singapore has a TRM policy, a risk management policy and guidelines, technology risk management guidelines, which articulate in granularity the requirements and the baseline of technology risk management, which needs to be in place for actors in the financial space under the governance remit of the Monetary Authority of Singapore, and similarly, Hong Kong Monetary Authority, and India, and ANZ, Indonesia, Malaysia, South Korea, Japan, all of these, the regulatory bodies governing traditional financial space have, some of them already had very mature, um, um, uh, regulatory guidelines in place for financial services. Some of them are developing now, but I think like you rightly mentioned earlier, the key components of the technology, what's wrong with my tongue today? The components of these requirements, which focus on governing technology, those components we are seeing ported first over, because these fintech platforms are fundamentally technology built. Their fundamental component, the base on which these platforms are standing, are technology components. So porting over the technology components from the TRM policy for MAS in Singapore, for example, makes obvious sense. Compliance with that makes obvious sense, making sure your infrastructure is secure, making sure you're reporting, making sure you're capturing, making sure you have a GRC over your technology, making sure making sure you have an SDLC, making sure your infrastructure retention, disposal, all that good stuff, which is part and parcel of a typical infrastructure security baseline for traditional financial space under the MAS umbrella. Those are some things, those are the first, one would imagine, financial actors in the fintech space would like to adhere to. And of course, and I'm sure we'll talk about it in shortly, different actors in the fintech space are going to have to develop very bespoke levels of robustness when it comes to managing their security or risk baseline. Because if you are doing traditional digital wallets, for example, the type of security posture you require is quite different than if you're doing a blockchain-based, DeFi-based, token-based platform. Because over there, a different type of security posture is required with different components and a bigger investment in security and technology, etc. So yeah, I mean, long story short, coming back to your original question, what can be ported over from existing financial sector governance and security postures would be the technology component of that, and the laws and the guidelines which govern that. That makes the most sense as a first step.
Right. I think that's great advice for maybe organizations who are just getting started in this space.
Yeah.
But I kind of want to revisit one point that you mentioned in the beginning of your answer, which is, there are countries which are mature when it comes to fintech, and there are countries which are just getting started, or, they are somewhere along the way. So, so when it comes to these, the comparison of sorts, how can these emerging economies learn from and catch up with the mature ones?
Yeah, I mean, Priyanka, again, that's a great question. I think I mean, the democratization of the one benefit of the democratization with these technologies is that the monopoly of the first world doesn't exist anymore, or should not exist anymore. We are seeing great innovations coming out of India, coming out of countries around India and in this particular neighborhood. Even though, let's take India as an example, even though India might have other challenges in terms of governance, in terms of penetration of technology, but there are marvelous unicorns emerging from India. So that means human innovation is not going to stop. And the lack of a robust government oversight, enablement, is not going to be an impediment to entrepreneurs who want to build great things and great companies, even if they are in a country like India, where the governance, especially in terms of technology, is not homogeneous. In some places, it's really good. In some places, it's still catching up. So what I'm trying to say is, despite these challenges, a country like India, for example, has produced leviathans in the technology space. So this shows that the monopoly of innovation doesn't solely rely on those so-called advanced economies, where they have very robust governance and laws in place. I think my takeaway, and I've worked in India before for a long time, in this part of the world, including India before, and the reason I mentioned India is because obviously a large market. But let's talk about ASEAN in general. Let's ASEAN, APAC in general. Let's lump that all together. What I see in countries like India, countries like Indonesia, Thailand, Vietnam. Vietnam is an emerging hub when it comes to fintech now. Indonesia as well, with Gojek's the direction in which Gojek went. All the other major players like Grab and others, they are becoming more and more solely focused on the fintech is becoming a much more bigger chunk of their pie and their mind space than what their original mission was, because of the adoption. And my whole monologue here is coming back to the point that these companies did not succeed. These companies didn't succeed because there was a robust governance framework, a robust regulatory framework in place. They succeeded despite there not being one. So what is happening now is, especially in countries like Indonesia, with Gojek and major names in India, what is happening is government is now playing catch up, and which is a good thing. Traditionally in Asia, governments are always bureaucratically heavy, bar some countries. And so now government is playing catch up. We are seeing that in Indonesia, we're seeing that in India, we're seeing that in Vietnam, we're seeing that in Thailand. Singapore was, being a small country, the government was always very pragmatic, but the other countries in the region, the government is catching up to the innovations from the private sector or from the fintech space. So I think that is the trend which we are going to see in the market, where in countries where there isn't a robust governmental framework, governmental regulations, entrepreneurs are going to innovate, and then government is going to catch up. I think one last thing I would like to mention, there are some instances where entrepreneurs innovate, like for example in China with Ant Financial and the other giant payment networks over there are now being hammered on and being forced to separate and all the other directions in which the Chinese political system is pushing them to. That is, but that is, I think, unique to the Chinese political system. But nevertheless, that is an example in front of us, is that this evolution of fintech innovators, platforms and services, it depends upon the home country in which they're based in, the regulatory base of their operations. So I think investors, entrepreneurs thinking to build disruptive technologies have to take a good hard look at them, at where they're basing their operations on. Some regions are more pragmatic than others, and Some are not that pragmatic. So I think that is going to be the tug of war between entrepreneurs in the fintech space and governmental gargantuans who are going to always be a bit slower when it comes to innovation. So I hope that answers your question.
It does. And I loved it. It's a very refreshing take on questions that I've had, pondered over for quite some time. So now that we have kind of taken a look at the challenges, the benefits, the, how to tackle these challenges, I'm going to ask a question about one topic, which I think everyone in the audience will want to know is, I mean, I don't think we can talk about fintech without talking about blockchain. So, yes. So in your opinion, will blockchain transform the way that financial markets operate around the world?
Yeah, I was afraid you were going to ask that question. No, I'm kidding. I think that's a very pertinent question. Look, like I mentioned in the beginning, DeFi, decentralized finance, a category in which blockchain sits, is the future. There is no stopping that. I mean, just like there was no stopping everybody believing the earth revolves around the sun, there is no stopping the innovation, which is decentralized finance. But it's going to be a zigzag, a roller coaster of a ride. Because why? Number one, governments and regulators are always going to push back against the loss of control. That is basically what DeFi is. What DeFi does is takes these platforms away from being under one regulatory body, under the guise and direction and strategy of one particular government authority, and takes it away from their hands and decentralizes it across the board. So they don't have authority, they don't control it, right? So they're always going to fight that. Some economies. Others are going to see this as a, especially in the European Union. I've worked on products in the European Union for large industries. And because of the political setup of the large blocks like the European Union, with a customer base of 500 million and a unitary regulatory body under the EU, they're going to find it much easier. Decentralized technologies, including blockchain, are going to find and are finding much easier adoption. This again comes back to regulatory oversight, etc. Are finding an easier home in terms of innovation in the EU than they would under China or in the US or even in Asia, owing to the unified nature and the large block which exists in the EU. But that is one aspect of the equation. The second aspect of your question, I mean, it goes without saying that the world is shrinking. And again, mass adoption is taking place, has taken place, is taking place, will continue to take place. Paper money is going to become a dinosaur or a dodo. Nobody's going to know about it. I mean, it's been years since I used paper money, and I'm sure others are like that as well. But coming back to on a serious note, coming back to the fundamental point is decentralized DeFi technologies are unstoppable. We are going to see an evolution of blockchain, of other Ethereum and others. We're going to see, and we are seeing, adoption of these, especially of blockchain, and forking of that into other innovations across the board. And that is going to compel the mass adoption of a blockchain without question. I mean, I'm not a betting man and I don't have a crystal ball, but one thing which the cumulative data has shown us and is showing me and is showing other practitioners is blockchain is the future and is going to weave itself into the fabric of our society in one way or the other. It already is doing that. Countries are adopting it as their national exchequer. It's being used in satellite communication. It's being used in warfare. It's being used in blockchain specifically. It's being used in industrial systems. So it's already being adopted, not only in the fintech space, but in other aspects, other segments as well. But yeah, that is definitely the future, and it's going to stay like the examples I gave before. There are many ways in which blockchain is embedding itself into our society. fintech being one of them. But especially in the fintech space, again, because of the regulatory nature of the segment, it's going to be a fragmented a trajectory. But blockchain as a concept and as an implementation is already being implemented across various segments. So I hope that answers your question.
It does beautifully. Thank you so much. And since we've been talking about where blockchain is going to take the fintech industry, I believe that brings us to the last question for our conversation today, which is holistically, where do you see the fintech industry going in the coming years? And what developments are you most excited about?
No, that's another great question. Look, I am very optimistic about the fintech segment in general, especially in Asia Pacific. We are seeing all the major startups, the unicorns, focusing their eyes and their sights on the fintech piece of the pie, because they are seeing mass adoption they have seen mass adoption from the users, and their revenue stream from this particular aspect is a large piece of their pie. So that is going to be the user adoption is the fundamental, and the user adoption exists because there is ease of use, because everybody has a phone these days, and they're able to download an app and send money or do whatever they're doing using a fintech platform or service. So we are going to see innovations in the space in unpredictable forms. But the one thing which I'm very certain of, given the data which we've seen, is that especially in the fintech space, especially in the payment space, this is going to become the norm. The norm is going to become use of digital platforms, fintech platforms to transact. And not only that, we're also going to see slowly the adoption of crypto as well. Because before, crypto was sold and bought under the various guises, which brings security issues and financial insecurity. That is going to be mainstreamed as well. So I think, and that is, I think, which the younger generation is very excited about, and that is what is going to drive innovation in the fintech space, payments and crypto. And of course, there are going to be other, large financial organizations with their multi-segment, multi-pyramid offerings in the core financial space are eventually going to port that over using a DeFi base as compared to the traditional base which they have now. So I think these three, given the cumulative data which we see in the past decade, these three innovations are where the fintech market is headed, as the numbers show.
Thank you so much, Manan. I think the future looks bright for the fintech industry.
Indeed.
And I think that brings us to the end of our conversation today. Thank you very much for those amazing answers. I'm sure our audience is going to take away a lot of interesting, insights from this podcast. And I, for one, am very excited to see how the fintech market develops in the coming years. And yeah, I think that's about it. Do you have any closing words for us?
No, first of all, thank you for having me. It was a pleasure. I think, absolutely, I'm very excited about the fintech space. I just feel that we're going to see a lot of innovations from entrepreneurs in the space across APAC, whether it's India, ASEAN, ANZ, Korea. We are going to. I'm talking to startups every day as part of my job, my day job, and I know that there are great platforms which are coming, great services which are coming. So I am very excited and very psyched. And the future, like you said, is really bright. And I'm very eager to, and I'm very blessed to be living in this age when we are able to see such innovation take place as a practitioner in this space. Absolutely. But yeah, I thank you for having me, and hopefully your audience was able to glean some valuable information from the conversation we just had.
Not some, I'm sure there were many. And thank you very much. The pleasure is all mine. And I look forward to more such interesting conversations in the future, Manan.
No, thank you so much, Priyanka. Thank you for having me. Appreciate it.